very much. Just as a wrap-up, because we're running late for dinner, and I want to give some time for some Q&As as well. Just a reminder of some of the things that we discussed today. Luis, you've taken the, as usual. Can I have it back? Can I have the remote? Thank you. Appreciate it. So just a reminder on some of the things that we discussed. Okay, this is not working. No battery. Luis, you kept the battery. Dá-me que funcione, tá bem? Que este não funciona, que não tem bateria. Obrigado. Ok. Vamos lá ver se a gente consegue pôr isto a funcionar. Continua? Ok, já está melhor. Obrigado. Okay, so networks and infrastructure. Three key messages. We've done all our CapEx. It's done. As you know, about a third of our CapEx is client-related CapEx. Then we have modernization CapEx as well. The fact that it's client-related CapEx, it means that we have a hedge against what's going on with the economy. So if there's no demand, we will not incur the CapEx. Second thing is, we have one convergent network. It's all IP, meaning that we are very cost competitive. We have the best coverage, best speeds, and a reliable network. With regard to B2C, as you saw my colleagues present, we still have room to grow our TV customers, our triple play customers. There are 2 million people out there that are not our customers. We believe we can go get those customers and can also hopefully build up the penetration rates in our country. With regard to mobile, difficult to build, if you like, premium around mobility right now, but data is an opportunity, and I think we can do convergence, and convergence will allow us to move the goalpost into an area where I believe Portugal Telecom has unique competitive advantages. Business to business, 75% of our revenues are now coming from data. Can we do better than that? Yes, we can. Why and how? Why? Because we believe the cloud is a good opportunity, and how we're going to bank more and more cloud. With regard to SMEs, data is only 32% of our total revenue. So there's a huge opportunity for us there to do exactly what we've done with the large corporates by simplifying, if you like, our offers for the SOHO segment, and then banking, if you like, SMEs with some of the cloud offers that you'll be able to see tomorrow. On operations, you saw how savvy we are in terms of measuring, and ensuring that we can deliver on cost cutting. So we're fanatical about KPIs. Moreover, this is underpinned by significant investments we've made in IT. Innovation, we have a structured approach. Capital allocation is important, but also mind share, and also how we allocate the talent within our company as well. These partnerships, the ecosystem we've built, domestic partnerships, international partnerships, relationship with universities is not something that you do overnight. It requires a profound cultural change within your companies in order for you to ensure that you have that talent available, so that you can actually multiply that talent, and then you can deliver the kind of services that your customers will want and surprise them month in, month out. We're not going to give you numbers. This is a technology day. We will be presenting our update on the 8th of November. It's going to be an update on our Portuguese business. But from what you've heard, I hope it is clear to you that we think we can grow market share. We can grow market share of customers. We can also grow market share of revenues by broadening the scope of services that we offer. Churn is coming down, so subscriber acquisition retention costs will continue to come down. If we are able to manage the churn to 10–15%, you can imagine what this does in terms of customer lifetime value. There is this disconnect between the economic impact and the financial impact. We're going to have to bridge that. You're going to have to believe that, these 12–13% churn numbers that we've said and we presented to you will generate and will create value for our shareholders long term, and therefore we should continue to invest in growing our market share, not just of subs, but also of revenues. OPEX will come down. We think we can continue to reduce costs. We're not talking about letting people go. Right now, frankly, we are not going to increase the unemployment problems in Portugal by sacking people. We're not planning to do that. Quite the contrary. We will continue to hire young people so we can continue to, if you like, rejuvenate our company in terms of skills, in terms of age, and in terms of capabilities. What we will also try and do is take productivity levels up, and we're going to try and do more insourcing so we can translate this growth in productivity in lower cash costs for our company. CapEx, we've done the investments that we needed to do, both in fixed, both in mobile, transport network. We will be completing our data center as well. As you know, we are building the first 3,000 square meters. December this year will provide an update as to how things are. But I think first quarter next year, our data center will be ready to take on business from customers, not just in Portugal, but also in Europe. To wrap up, I'll just, what comes to my mind is one of my heroes. He says that grass grows and birds fly and waves hit the sand. What we at Portugal like to do is wake up every day, compete, and we like to win. So I hope that today you felt that all our team is engaged, motivated, and that we believe we have what it takes to deliver on the commitments we've made to the market, and that we can continue to deliver growth. So we like to compete, we like to win, and hopefully, we will continue to honor all the obligations that we have and all the commitments that we have made to you as shareholders, to you as bondholders, and ultimately to all the stakeholders that we have. So very happy to take questions now, and of course, I'll be answering some of those questions with some of my team members. Last thing, thank you very much. You've done an impeccable job. I'm so proud. Thank you. So questions now, please. I think we got some mics, so happy to answer any questions that you have. Yes, please. Vocês têm microfones? Tem mic? Yes?
Hi, thanks. It's Tim Boddy from Goldman. I just had a couple of questions. You've talked at length about the opportunities from fibre, but the majority of your homes actually don't have fibre to the home and won't, it seems, for some time. Can you talk a bit about the opportunity both for service improvement and cost reduction, in that other 60–65%. Potentially, for example, we're hearing in some countries some talk about copper switch off and a shift entirely to LTE. Secondly, just to come back to the question of growth, you've laid out a very compelling set of innovation the company offers or is undertaking. At what point could that translate into growth again for the company? Or is that just entirely bound to the macro?
Okay, thank you. Let me take the second question and then I'll come back to the first one so I can give my team here time to just gather some info. Obviously, if you look at, first and foremost, 60% of our business is down outside Portugal. So it's worth mentioning that we are geographically diversified as a company. We've taken the diversification effort to another level by diversifying our product offering as well. So when you think about us, I hope that you will not think about us as your normal telco that basically does voice or does data or does just video. No, we do everything. We do triple play, we do quadruple play, we do convergence, we do a lot of cloud, we do IT, we do BPO. So obviously, the ability for us to translate this into growth will depend also on the economy. Now, austerity measures are of course, having a direct impact in consumer confidence, in business confidence. On one hand, this will, of course, have a direct impact in our business, but on the others, it could translate into opportunities. I was telling you about the cloud. The cloud will allow our customers in Portugal to structurally reduce costs by 30 to 40%. So my view is that some of the barriers that you typically have coming from the IT guys around cybersecurity and so on and so forth, they will become secondary when you are confronted in this environment with a value proposition that makes you more agile, but at the same time reduces your costs by 40%. So it would be misleading for me to say that some of the things that you have seen here today will lead us to tell you that, listen, you know what, we're going to grow our SME revenues, or suddenly overnight our corporate revenues will grow. But we are poised. Once, as and when, we have some tailwind, we're going to take off. And we're going to take off by building further our market share, not just of subs, but also of revenues. Your point about the fiber. Well, we cover 40% of the homes. But, as you saw in the presentation, that's probably 70% of the GDP. So bear that in mind, that those 40% that we have covered, the 1.6 million homes, actually represent the bulk of the homes that we would wish to cover. If you were to ask me, can you grow this by an extra blob amount? Yes, as and when. We think that segmented regulation right now has limited us to invest in 1.6 million homes, so we have no intention to go beyond the 1.6 million home. What could be, let's say, 3, 5, 10 years down the line, the maximum number of homes that we may cover? About 2.6 million homes. Why? Because that's what the cable plant covers as well. And as we built the cable plant 14 years ago, we know that there are those are the 2.6 million homes that you want to take, your fiber to. But we're not in a hurry. Right now, as my head of operations said, the key focus is to ensure that we get premium penetrations using fiber. I don't think we have realized the full potential. Let me get Falcão to answer the second part of that question.
In terms of the question that you asked of copper decommissioning opportunities with LTE, we are surely addressing this. It should be faced as an OPEX opportunity, OPEX reduction. So we are studying, I can give you an examples in terms of fires and in terms of copper theft. It's a problem that this kind of theft of copper is increasing, and mostly in regional and in rural areas. We surely have a positive business case to deploy 800 megahertz LTE in order for our voice and broadband clients to substitute it for LTE.
In fact, next door, you'll be able to see that.
Yes.
Okay, so tomorrow morning you will be able to see how we're bringing together, okay, the new routers and LTE in order to ensure that in rural areas we can actually cover that without necessarily investing in copper. Thank you, please.
Yes, good afternoon. Mathieu Robillard, Exane BNP Paribas. I had two questions, please. You laid out some very interesting innovation, new products and services that worked out, and you have a lot of new projects. Unfortunately, sometimes in this industry, the regulator seems to want to lower the barriers of entry or to disrupt the competitive advantages you can build. How do you think about that? How do you project yourself in terms of building new competitive advantages? How do you structure your exclusive content rights, for example, in the context of an active regulation? The second question has to do with pricing power. You've highlighted that new technology enables you to increase the ARPU and spending of your customers. Obviously, another way to increase spending is to create scarcity of supply and therefore regain pricing power. Is it fair to take away from your presentation that you don't really believe in the scarcity of supply as a way to drive revenues and rather on multiplication of different offers? Thank you.
Okay, let me take again the second question first. You saw my slide where I said that in the US, supply-demand has meant that operators that have invested in the network have translated those investments in higher profitability, either because they have pricing power or because they have been able to improve the customer experience to a level where churn is much, much lower. So customer lifetime value is far superior. We believe that in other markets, as data usage picks up, whether you're talking about mobile or you're talking about fixed, chances are we will go through a similar process. Now, of course, with the economy as it is today, it is very difficult for you to command a substantial premium, especially if you're thinking about B2C. But if you're talking about B2B, as my colleague indicated to you, we are no longer competing head-on on prices. Quite the contrary, we have a service offering that includes all the way from doing sort of bread and butter voice, video and data to actually doing IT consultancy and cloud. So there, I believe that there will be scarcity associated with it. I'm sure that with the kind of visibility that we are giving right now to all the investments that we have made in our network, including the data center, we're going to be called upon customers to actually go and get them virtualized so we can bring down their costs. Can we do it with scale? No, we can't. We know that. We have still to get the right skill set necessary within our teams to do that in gigantic numbers. So there will be scarcity associated, and hopefully my commercial teams will translate that into superior prices as well. With regard to regulation, we used to own the cable plant. We spun it off. Overnight, we had 80% market share in TV, and overnight, we had no market share in pay TV. And we've built from scratch, 2nd of April 2008, to now, to be the leaders in triple play in this market, from scratch. The ducts are open in Portugal. There are no horizontal barriers. We are, I think, one of the very few countries in Europe where there is a regulated offer for access to our ducts. We have dark fiber there that is ours, and we have dark fiber that is of our competitors. If you think about the vertical ducts, the regulation changed in Portugal, I think about 12, 18 months ago. Once we had built our first 1 million homes, the next 600,000 got impacted by that regulation. So if you take the buildings, the vertical ducts that we are building, that we have been constructing in some buildings where it's necessary, they allow space for us and for 2 more competitors as well. So there are no horizontal barriers in Portugal. There are no vertical barriers in Portugal as well. So from that standpoint, I think the regulator has done an impeccable job to establish a level playing field. So it comes down to, do you really feel the service? Do you understand TV? Do you understand content aggregation? Do you understand advertising? Okay, and can you really translate those business models into something new and different, yes or no? And the answer is, we can. If others can't, then I think it's their problem. With regard to content, we paid a very high price for not having critical mass. As you know, in several conference calls, we said we needed to hit 850, 800,000 subs to have critical mass, so that we would stop being penalized by the minimum guarantees that were being imposed upon us on what we think and what we all believe is killer content: sports, news, and movies and series. So we paid a very high price up until we hit 800,000. Beyond that, after 800,000, we're dictating our own agenda now. So our content price is competitive. We have all the content that we need. We're very competitive right now in terms of prices, in terms of subs. And those content guys that want to work with us and they want to explore different business models, we're more than happy to do so. If they want to talk to us just on price, maybe we're not that interested anymore. We launched 3 channels recently. Okay, we launched 2 channels, and we'll be launching a 3rd channel first quarter next year. They're exclusive. Okay, and again, we had the bargaining power to negotiate attractive terms and conditions to actually have that content in our platform. So I don't think access to content is an issue. I think prices are very competitive. If anything, prices per subscriber are coming down because the cost of the content has moved away from being per sub to being per channel, independent of how many subs do you have. Thank you. Yes, please.
Thank you. Javier Borrachero from Kepler. Just a bit of a follow-up on this idea of scarcity and price premium. How do you see mobile pricing or mobile data pricing evolving, particularly in terms of moving maybe from volume-based to speed-based tariff plans? Thank you.
I think in promoting 4G, you need to talk about coverage first, then you need to talk about speeds, and then you need to talk about reliability. We're in the early stages of talking about coverage. We have the best coverage. Our new campaigns now will talk about speed, and then eventually we'll start talking about reliability. And why is that important? Because if you take into account the innovation roadmap that we shared with you, a lot of those services will be underpinned by reliability of the connectivity that you're making available to the customers. You're not going to virtualize all your infrastructure. You're not going to you're not going to start using, if you like, platform as a service, software as a service, if you're not sure that it's a reliable connection. So I think that the challenge that we have, and we are debating this internally, we have some ideas, but certainly not the right answer, is that we have 40% of our pipes empty at different times during the day. We need to find a way to monetize that 40%, if you like, volumes that we can still use And this will mean that we're going to have to think about our tariff plans differently to what the industry has done in the past. I think one of the big mistakes we as an industry made is that we brought our concepts of how we should price fixed line broadband into mobile. I think that was probably a mistake. I think we need to evolve on that. I have some ideas. We are discussing some ideas. I don't have an answer to give you specifically. What I can say to you is this. It is very difficult for us to command the premium for mobility right now. We PT, we the industry. And the only way we're going to be back in this game and asking people to pay us more if we move the goalpost. And for us, moving that goalpost means convergence. And we believe convergence will be the answer, we hope, to our prayers in terms of being able to increase our market share, essentially of revenues, which is what ultimately matters to us. One last question? Great. Thank you very much for being here today. We have dinner. I would like to say that our Prime Minister will be joining us for dinner as well. So he will make a speech about the economic situation of the country. So I think it will be a great opportunity for you to hear directly from him as to how things are going. Once again, thank you very much for being here today. It's meant a lot to me. It's meant a lot to us. Thank you.